transforming your business into a money-making machine. Our learning objectives today is to understand the concept of profit first. Now, this is a book that has come out as a very popular book, so we want to discover some of the interesting aspects of it and how to implement it.
Wendy,
The second is to create a slush fund for your downtimes, and we certainly are in a downtime now, so this is a good opportunity to create that. Also, we want to talk about repricing your products or services to create more value. And finally, we'll talk about taking advantage of the PPP and EIDL loans. Okay, today, my name is Wendy Roberts. I'm your speaker today. I'm a CPA as well as a startup CFO. We sold that company to a large public company a few years ago. I'm also a former corporate finance executive. I've done lots of mergers and acquisitions and actually 2 spin-outs from a larger company into a smaller public company. And I've actually been on the NASDAQ opening bell, taking a company public.
Wendy,
I am the current Chief Visionary Officer and CFO for NorthStar Strategic Partners. We are a consulting agency, and I'll get into a little bit more about what we do. I'm originally from the Midwest. Yes, I'm a Hoosier from Indiana, and I graduated from Indiana University with an accounting degree. I enjoy cycling in the Bay Area, and this is one of my things I love to do on the weekend. Now, a little bit something about NorthStar and our sister affiliate, Spectrum Business Financing. So NorthStar Strategic Partners, we are a consulting company, like I mentioned. We actually focus on what we call the 4 points of focus. Those are 4 areas that we think every company needs to focus on in order to not only just become a good company, but a great one. So we use some of the techniques that have been found in very large public companies, and we bring that down to small companies. So in other words, we take the C-suite and bring it to Main Street. That's what we do. And then we also have Spectrum Business Financing, which is an affiliate, like I mentioned. We help companies find financing when they're not able to get it from the bank. Now, the question that I want to ask everyone here on the call is, what if you could turn your company from a cash-eating monster to a money-making machine? You would want to do that, would you not? Of course we all would. So if you can talk about profit first for us, let's talk about it. So profit first is a behaviorally based cash management system. It's a system that allows you to instantly measure your financial health and take action simply by looking at your bank account. So you take your profits first, always take them first, so that it enforces you to be more frugal. Plus, it can also introduce more innovation. If you have a lot of cash that you have in your bank accounts or within your company, you may not be as efficient. So the more efficient your company is, the more profitable that company can be. And having a small, medium-sized company that's consistently profitable can actually be worth more when you want to sell it than a larger company that struggles to sustain itself. Now, one of the main points around that I wanted to bring up is when you're ready to sell a business, you actually can do 2 different types of calculations. The first is you can determine sellers' discretionary earnings, are called SDE. That is a calculation that takes into account some of the things that you've taken out of the company in order to determine a valuation. The other one is called EBITDA, or earnings before income, tax, depreciation, and amortization. Both of those calculations help you determine and help a buyer determine how much your company is worth. It usually takes about 8 to 12 months to sell a company, and these are one of the factors that you need to have in order to list your company for sale or have it acquired or merged. So we get stuck in these axioms. We think it's, something is always true. Like everyone thought the world was flat at one point in time. Well, it isn't really. We all know it's round. And in GAAP, in the accounting world, we know that a P&L or an income statement is sales minus expenses equal profit. It's what we call the same old thinking with the same old results. There are 28 million businesses here in the United States. 28 million. The majority of profitable making. We all that with the implementation of Profit First. So the new accounting formula is sales minus profits equal expenses. Again, it's profits, taking those profits first. So you create these small plates, or if you consider envelopes. So let's say, for example, you had $100 and you wanted to put $20 into your slush fund account, another $30 to pay yourself, let's say $15 for taxes, and the rest of it then would be for operating expense. So we allocate the money that you have based on these defined percentages.
Wendy, can you hear me?
Profit First allocation tool.
Wendy?
Now there are 4 steps that you do in order to achieve the Profit First methodology. The first one is you figure out what your profit should be. Then the second, you set up your separate bank accounts. Number 3, you remove that temptation so you don't go, into the kitty, so to speak. And then the 4th is that you implement and hold yourself accountable. So step 1. So this is part of the Profit First allocation tool. If you notice, there's a new concept here called real revenue. So this is a table. This is a standard table. It's not applicable for every business, but it has the ranges of income across the top, and then the percentages for each of the 5 areas right below. So real revenue is your gross revenue minus materials minus independent contractors. And now there is a definition that goes with independent contractors. And when we work with you, we go through that process. So that determines real revenue. And from there, you determine your percentages around profit, which is your slush fund, your owner's pay, how much you're going to pay yourself, the taxes that you have to pay, unfortunately, to Uncle Sam, but that's where tax planning comes in. And that's very, very important around tax planning and how we can save you taxes. And finally, your operating expenses, how you pay other people and your employees. Step 2, where we are right now is your current allocation percentages. We take your financial statements, like your balance sheet, your income statement, your statement of cash flows, we take your tax return, and we determine where you are today. And then we say, okay, given where you are today and conversations that we have with you, we then look, okay, what is our targeted allocation percentages? What makes the most sense for your business and how do you want it to grow? So again, I want to reiterate this, always take your profits first. You want to focus on what comes first, and that's profits. There's a Parkinsons Law that says that in general, that you will equate demand to supply. So in other words, you will spend as much money as what's in your bank account. For example, let's say you had $1,000 in your bank account. You would spend all that $1,000 because it's there for you to spend. However, if you took, let's say, $200 and you put it into an account where you don't touch it for a whole year, then you would only spend $800. That's the Parkinsons Law. And again, bank balancing accounting works. You know at every point in time how much is in your bank account, especially if you're using QuickBooks is an easy example. Now, the proof for your hard work of following this methodology is like a 401k, our retained earnings. So again, sales minus profits, where you pay yourself first, and what's left over is expenses that you then pay. So step 2 is setting up those 5 bank accounts. You've got your income account where you got deposits flowing in. Then you do your allocation by percent, right? So you do your profit, which is your slush fund, those rainy day funds, or if you want to pay bonuses out later, you can do that. It's there for you to determine what you want to do with it. Then you've got owner's pay. You work in the company. You are the company. You deserve to be paid fairly. The fourth is obviously tax. You have to pay taxes. And lastly, again, you pay your operating expenses. Step number three, as I alluded to, you want to remove that temptation of taking that money out of one of those four that's not your operating expense, right? Take money out of those accounts in order to make up for something else. Well, we don't want to do that. We want to make it much more difficult for you to do that. So you might open those bank accounts in a different bank. So it takes you a little bit of trouble to get to it. So that's removing that temptation. And
Wendy,
that's
can
where the
you hear me?
behavioral part comes
Hello,
in.
Wendy?
And then
Wendy?
step four is to implement,
Hello?
to
Wendy?
allocate, and then distribute accordingly. And then finally, to pay your bills. So you have to determine what works best for you. We recommend clients to do twice a month, perhaps on the 10th or the 25th, or the 1st and the 15th, or the 15th and the 30th. Whatever works for you and your business, we recommend that you keep it to twice a month. That way it helps you better do your cash flow management. You know what's in your bank account. You can better allocate funds to where they need to go. And basically the final doing it twice a month is to create that rhythm, that you stick with it, that you hold yourself accountable. Now, there are some stumbling blocks that you might be incurring, and one of those is debt. Again, as I mentioned, we have Spectrum Business Financing. We can help you find that opportunity to relinquish some of that debt. Maybe you've got some very expensive debt. We can find other ways to get that down. Also, you want to focus on what your smallest debts are. Let's say credit cards. If you have lots of credit cards, start paying down those credit cards. Take the smallest balance first. Start making extra payments, pay it down. Once you pay it down, then start on the next one. Or you might be struggling with cash flow. Maybe you need a line of credit that we might be able to help you with. And then finally, you may be saying, I really don't know where to start. Where should I start? Well, here at NorthStar, if you are uncertain how to start or even how to make your allocations, we can help you and guide you through the implementation of Profit First. We can help you with that Profit First tool, the allocation tool that we have on hand, and we can formulate a report and a plan, an implementation plan for you over 4 quarters or 6 quarters or 8 quarters. We help you remain accountable to those quarterly profits, right? So when you hit those quarterly profits, we hold you accountable to put the money where they're supposed to go based on those percentage allocations. And we can also help you with other financial goals. Like, let's say, for example, you might want to set your company up for success by creating a legacy, or maybe you want to sell your company in about 2 or 3 years. We can help you do that. Some other areas that we can help you is to find those efficiencies. One of the 4 points of focus for NorthStar is around what we call those critical factors, as I mentioned, to help companies become successful. One of those is powerful marketing strategies. The second is very strong cash management systems in finance, like what we were talking about in Profit First. The third area is operations, efficiencies, evaluating your product and service offerings. How is it that we might be able to improve your operations to make you more profitable? And the last and finally, which I think is probably one of the most important ones, and that is, do you have the right people in the right seats? Are they engaged? Are they a team? Do they function as a team? Do they know your mission? Do they know your value propositions? Do they know your core, what your core is, what your why is? Fully engaged teams, alongside with the business owner, you have a main goal and objective. You can accomplish so much more than what you can if you're not aligned. And then we can assist you in cloning your best clients, those top 20% that pay you the most of your revenue, and we can help you fire the bad ones. And we can also partner with you every step of the way so you don't have to go it alone. This can be a very scary process. So we're here to help you become very profitable. So today, I'd just like to say, I don't think there's any better time as we have been going through this craziness through 2020, is to recover, reset, and renew. Now, the NorthStar methodology, again, I alluded to some of this. We focus first on profit first, getting companies profitable, having them have a proper cash management system. Then we move into your processes. We look at your people. Are they the right people? Maybe they're not the right people. We help you formulate that plan. We help you look at your marketing strategies. How can we keep you in a position where your products and your services are very competitive? And lastly, we help you create your legacy. Perhaps you want to have your business acquired. Maybe you want to sell it to employees. Maybe you want to have a merger or an acquisition. It takes about 8 to 12 months to sell a business. You have to go through what we call a CBR, which is a comprehensive business review, or you might go through evaluation. You have to know what it's worth. Also, you have to go and advertise the business. You have to find the buyer. Sometimes those buyers don't always work out. You also have to try to find financing if it's not an all-cash deal. And sometimes that's SBA, sometimes it's equity, private equity, sometimes it's venture capital. All of those things you have to go through, and a lot of times it takes 8 to 12 months. So we always recommend to customers, if you're thinking about selling, start planning, especially around tax planning, because it's too late. Once you've sold your company, it's too late to do tax planning at that point. So we usually recommend 12 months before you actually want to sell, sometimes 18 months, depending on the size of the company. We recommend you start a consultancy with companies like NorthStar to help you get positioned, to increase the value of your company. In many cases, it could be as much as 70% more than what you could have had, right? There are 8 critical factors that people who are going to buy a company or acquire a company, what they look at. Financial performance is one of them, but there are 7 more that can help you improve the value of your company. All right, I'm going to stop there. For any questions about this, then I'll switch over to the PPP and the EIDL.
Does profit first require a certain size of company? For example, if our annual revenue is only 500K with 5 employees, is that an appropriate size company to use profit first?
Absolutely. It can work with any company. It can work from a startup all the way to a $100 million or higher company. Absolutely. It's all about discipline. Discipline around money and how you actually spend that money and how you're going to plan for it. And obviously budgeting and forecasting is very, very important. We have some of our customers that we work with, we do a 12-month rolling forecast. So we coordinate profit first with that 12-month rolling forecast.
So that was the only question that we have.
Okay, cool. All right, so let's go into the SBA, the PPP, and the EIDL. And I will talk a little bit about each of these, and then I'll answer any questions that you guys may have about that. Sorry, one more. I'm back. Okay. PPPs for the Paycheck Program, and the EIDL stands for the Economic Industry Disaster Loan. So both of these are run by the SBA, and I think a lot of you have already gotten the first round of PPP and the EIDL. So these are the additional funds that were signed into law as of December 27th, 2020. So there's $284 billion that was done for the PPP and $20 billion done for EIDL. Now, here's the important part, very important. If you're going to go for the PPP, you need to apply by March 31st, 2021. Now you have a little bit of more time with the EIDL. You have until December 31st, 2021. And I do recommend for everyone to check out the SBA.gov website. It is being frequently updated, and they're constantly making changes to this. I couldn't encourage this more. Okay, now there are 3 types of the PPP funding. So there's one for the first time applicant who meets the SBA definitions of a small business, and you must be in business by February 15th, 2020. Then there's the second round of PPP, where the business doesn't have greater than 300 employees, which is most of them, I would think, here in the Bay Area, and notice the word and, a 25% reduction in revenue in at least one quarter in 2020 over 2019. Now you may ask me, well, I wasn't in business in 2019. I didn't start business till 2020. Well, if you started your business before February 15, 2020, then you can still do the comparison for your second, third, or fourth quarters to your first quarter to see whether or not you qualify for the 25% reduction. And then the last type of PPP loan in this one is those for additional funding for those who had returned their loan. They didn't accept it in the first go around, or they didn't get as much as what they were qualified for. So what's nice about this, as well as the first pass of the CARES Act, is that there was no credit check that's required, there's no collateral, and there's no personal guarantee. In many cases, if not most cases, if there were not the CARES Act, if you had a 7A or a 504, a 504 is usually a real estate loan. 7A is usually for the purchase of a business. It can also be real estate. They usually ask for a collateral, which if it's real estate, it's going to be real estate, or a personal guarantee. And they do credit checks. It's a very long process to get an SBA loan. So it also must meet the small business definition to be eligible. And in this case, some nonprofits are now included in this round. You need to plan or use all of your first round of funding before you can get the second round of funding. That's very important. And the loans are at 1%, which is the same as last time. 5 years maturity for those loans after June 5th of 2020. And if you got a loan prior to that, it's 2 years. So the maximum loan amount for the PPP for the second round is 2 million. And for the first round, first time applicant, 10 million. It's the same as the first time in the first round. It's 2.5 times your average monthly cost of payroll, but it also includes additional benefits such as dental, et cetera. It has now been included in that calculation. However, if you are a restaurant, if you're in the hospitality industry, that starts with that North America code, that industry code that we have here in the United States. If it starts with a 7.2, then you can get 3.5 times. Now, Congress also added this little thing that was not there in the first pass, and that is public companies, lobbying companies, and some other ones are not eligible for the second pass. Now, the covered period is anywhere from 8 to 24 weeks. We recommend customers look at the 24 weeks as to be the most eligible. And in fact, the loan is forgivable. It is forgivable if you use 60% or greater for that money on payroll and the remaining amount on the other qualifying expenses. Now, the qualifying expenses in round one was mortgage interest, not the principal, but mortgage interest, rent, utilities. It was very specific about what it covered. This time around, it's now expanded those expenses to be qualified. So they would include software, they would include accounting expenses. Other type of expenses would be included in this amount, including PPP. If you had, let's say, for example, you have a restaurant, or if you have a grocery store and you had to put up the plastic barriers or different types of machines around the area, you would be qualified to, that would be a qualified expense. And then this is most important for audit purposes. And well, I'll tell you the reason for that in just on the next slide, is that you need to keep your records for payroll for 4 years and other records for 3 years. Now, what's the possibility of getting audited? You know, if you got a really small loan, I would think very remote. if it's a much larger loan in the millions, possibly being audited is a factor, right, that you need to take into account. But regardless, you should keep those records, the payroll records, 4 years, and other records 3 years. So there are 3 different types of forms for forgiveness, and they are very specific as to which ones you need to use. The first one is a 3508 called Form 3508. These are for loans 2 million and above. Now, the 3508EZ is for loans $50,001 to 2 million. And the 3508S is for 50,000 and less. Now, what's interesting about the new second pass, and I alluded to this on the previous slide, there is a new form that's going to be developed. I would say it's probably going to be out by the end of this month. The SBA has a very short timeline to get that form completed, but it is a 1-page form and it's a certification form. So for any loans 150,000 or less, it's going to be this 1-page certification form. So therefore, that's the reason why you need to keep your records 4 years for payroll, 3 years for other, just in case you're audited. But this will help streamline the process for many business owners. Now, the idle loan previously in round 1 was subtracted in calculating your PPP loan. In the second pass, the SBA said, no, we didn't want to do that. So they need to make sure that they have equal treatment. So if you had a loan that you received as a PPP that had the idle grant or the idle loan taken away from it, please contact your lender so you can get, why I have here in quotes, ensure equal treatment. Now, the idle loans, those will be available soon. At any point in time, they're going to be coming live on the SBA website. So just be aware of that. The PPPs, those, how you get those is I would recommend you contact your current lender if you got the first one. But there are various lenders. If you need any referrals for lenders, please contact me or contact one of my staff, and we can direct you to which companies are taking the second pass loans. And then finally, the idle grant is not taxable. So some other specific things that are very exciting. If you have a current SBA 7A 504 or express loan, you can get 3 to 8 months payment is going to be made for you on your behalf by the SBA up to $9,000 per month. So in the first pass, if you remember, you got 5 months of current SBA loans were paid for by the SBA. So now they're tacking on another 3 months if you're a for-profit, or up to 8 months if you're a nonprofit. Second, as in the first pass, new SBA loans secured between February 1st and September 30th of 2021 will have the first 6 months of loan payments paid for by the SBA. And they're going to be capped at $9,000. And you might say, well, why would they want to do this? Well, they want to encourage new acquisitions of businesses because that is how the economy grows. So they're encouraging you to go out and buy a business. And then finally, the borrow fees will be waived for 7A and 504. This is a significant savings for anyone who's ever gone through a SBA loan. This is very significant. So NorthStar Strategic Partners, we are here to help you do whatever you need to have done to grow your business. We are smart business solutions made simple. Reach out to me at wendy@northstar-sp.com. I'd love to help you on any kind of element that you might want to talk about. If you just want to talk about how to grow your business, or maybe you want to set it up for success later down the road with a sale, we'd be more than happy to help you in that process. Okay, so questions.
All right, Wendy, we have another question. It's payroll was a qualified expense on the first PPP, correct?
Correct. Yes, payroll was a qualified expense. Well, it's part of the calculation. In other words, You got to spend, even on first round, you had to have 60% payroll and then 40% other, right? So your payroll expense would include your wages, the state, the the EDD taxes, etc., medical, etc. So if someone wants to reach out to me, you can put it in the chat here. I'll be more than happy to give you some what the entire calculation is. It's a little comprehensive.
Thank you. That was the only question. Anybody has any other questions?
So also too, I want to be able to give away a free book for Profit First. So if you're interested in that, please put your information in the chat. Be more than happy to, and Don Marino will help me pick the winner, and then we'll get out that book to you. All right, so I think that's it. Is there any other questions that I can answer before I give people about half an hour back in their day?
And also, if any of you are interested in that book or anything, please contact me and I'll get you connected with Wendy. Wendy, would you like to put your information on the chat, please?
Sure, I can more than happy to do that.
So if any attendees would like to get a hold of you, they can.
Okay.
Thank you.
You're welcome. And thank you for everybody that attended today. I really appreciate it. I wish you the best in the 2021. I believe it's going to be a banner year for all of us. And, there's going to be so many opportunities for us once everything starts opening up. So I'm really, really enthusiastic about what 2021 is going to be bringing to all of us as far as prosperity in the year. All right, there's my information on the chat. I appreciate everyone. Thank you again for your time, and bye-bye.